So guys, thank you very much for the opportunity to be with you here today. Today we're going to talk about the trading performance triangle. And really the trading performance triangle in and of itself is a very simple but yet very powerful concept which has made a tremendous difference in the performance of many of my traders and actually even people who trade other systems. So I'm glad to be able to share that with you today. So the whole idea and what we're doing here is that we want to create the life that we want to live, trading Forex. And to be able to effectuate that lifestyle, it's going to require obviously certain things. So I want to talk to you about those three things that are part of the essential parts or components of trading that are necessary for you to be able to live the life you want through Forex. So let me tell you a little bit about myself before I go any further. I am a Florida attorney. I haven't practiced law. I call myself an emancipated attorney is what I say. I haven't practiced law in many years, almost a decade now, since I began trading full-time. I'm a business owner. I've been successful in investments in real estate. I've been a full-time Forex trader since 2006. I think I mentioned that. I've worked in Forex strategy development and automation. I program in C++, MetaTrader 4, and Easy language as well. I've worked on joint projects with leading retail strategy developers, resulting in highly profitable and reliable trading programs. And I've been doing that for many years now. Now, my software has been used by thousands of traders, believe it or not, on every continent in the world except for Antarctica, as far as I know. So we've been around for a little bit, and we have been able to have some form of an effect using this performance triangle and with the strategies that we develop. I'm going to talk to you about how we're able to do that. Oh, there's a typo here. And I've also established a leading and exclusive Forex mentorship website called Tribe Forex. So let me get right into this. There are three core concepts to trading performance, and what we found is that if you have all three of these components in place, that you will be successful as a trader. Okay, so number one is trading integrity. It's at the bottom there because trading integrity is actually fundamental. It is the foundation of your trading career. If you do not have trading integrity, you will not be successful as a trader, period. And actually, that's what the market maker uses to cause people to fail in this market. That's why, you know, or statistically speaking, 90% of traders have had failure. So, you know, let me just make sure that you guys are seeing my screen. And I think that you are. We're going to have that delay, but I want to make sure. That you can see what I see. So if you can verify that for me, please do. It's a new piece of software for me. Love to hear if you guys can verify that for me. Dad?
Marcello, I'm still seeing a little about me on the screen. Again, there's about a 30 to 45-second delay, so it's going to take a little bit for them to see the screen.
Okay, got it.
Hey, but I can see your three core concepts, so you know, feel free to continue because it'll come up to them in sequence as soon as the delay catches up with you.
Excellent. Thank you so much. Okay, guys, so let me go on with this. So trading integrity is extremely important, and the other two legs are what we generally focus on, which are strategy and execution. Okay, and I'm going to talk about these two legs of the triangle as well because they are important, and many people don't have those two legs. You know, and I'll get into it. I'll get into it just now, actually. So it's integrity, it's strategy, and execution, and this makes sense from a common sense standpoint. We understand that you've got to have your strategy in place, and your strategy's got to be strong, and that's where we spend a lot of our time and a lot of our money finding strategies that actually do work. And then execution as well. Many people execute with automation. Some people stay up all night and try to execute their trades and that sort of thing. That is given less emphasis, unfortunately. And integrity is the one that is definitely the one that there's a greater lapse in most trading. So let me tell you a little bit about how what this means for you in real terms, and tell you a little bit more about myself, because some of you in this room do not know who I am just quite yet and why I've done this. So I was an attorney already. I was already successful in investments at the time that I began my Forex career, real estate investing at the time. Why did I switch to Forex? Well, there are a couple of reasons for that. Number one is I wanted to create the life that I wanted to live, and that was through, honestly, I didn't want to live a life where I'd have to go to work and work a 9 to 9, if you will, as an attorney every day, and someone got to tell me how much I was worth and how long I would work and how long and what the value of my work would be. That's something that I did not want I relate with me there. I also wanted to be able to travel. I've been to 40 countries in the world. I've been able to do a lot of things. So for me, this concept, this trading triangle, what it has meant for me and what Forex trading has meant for me has been this. This is the backyard of my house. This is where I do a lot of work. I call this my office. I spend a lot of time out here working poolside. That's my dog Luna over there in the corner. Okay. This is actually I just gave this apartment up, in my niece France apartment that I have in France, or had in France just recently. Beautiful apartment. That's a dinner party, and I've lived there for many years on and off between my house in Florida and this apartment in Nice. Recently, I took a European vacation for my birthday. I took my best friends on a trip with me to Europe, and we got to spend about 3 weeks in Europe, which was a phenomenal experience. So this is all to say, and also, guys, by the way, I raise money for worthy charities. So I spend a lot of my time raising money for worthy charities. Right now, I'm raising money for SOS Venezuela, which is in political turmoil right now, and people are in trouble. Now, that's a whole nother ball game. So I say all this because it's all about what's important to me, and what's important to me is for me to be able to have the time and the resources to make a difference in areas that are important to me, and also to be able to spend time with my family and live life on my own terms. And I could ask you what's important to you, but I'm pretty sure that one of those things is important to you, whether it be travel, whether it be lifestyle, whether it be making a difference in the world. One of those things is important to you, and that's why we do what we do. And this is why this triangle is so important. So this is the trading performance triangle, and I'm going to get into each leg of this triangle and why and how it can help you to become a very successful trader. So if there's a loss of power in your trading at any given time, you have got to look at one of these legs. So if there's a loss of power in your trading, it comes down to a breakdown in one of these three legs. Now, what most traders do is, most traders, when they have a drawdown, they either sit in the drawdown for too long, number one. Number two, their execution is impacted substantially. Number three, if the strategy is broken, they don't know that the strategy is broken, and strategies do break, by the way. Guys, as an algorithmic trader, as someone who spends a tremendous amount of time in analysis of the strategies, I can tell you that strategies do break over time. So what does that mean for you? That means that when you have a breakdown, let's say you have a drawdown in your account, you're going to want to look at, or in your strategy, you're going to want to look at where there may be a breakdown. And sometimes it's just a pullback in the market. So if all three legs are still strong, your strategy is still strong, your execution is still strong, and your integrity. And integrity for us means planning your trades and trading your plan. Okay, this is a very simple way to say it in a nutshell. And I'm going to get into that. So let's talk about that really quickly. What's integrity, and how does it work for us? So what I'm going to tell you is that casinos have a tremendous amount of integrity. And you're saying, really, casinos have integrity? And I'm saying to you, absolutely, that casinos have integrity. And let me explain that to you. So basically, the U.S. gaming industry at the time that I made this particular slide was racking up about $85 billion per year in profits. Okay, so that's casinos mostly. So they, these places, Las Vegas, for example. We were just in Las Vegas a few weeks ago. They black out the windows so that you can't see outside. You can't see that it's dark outside, how long you spend in there, because they want you to keep on gambling, right? So basically, the reason I've used gaming industry is because they use probabilities the same way that we use probabilities. Okay, the gaming industry, the very model that they use, has been used for centuries. If you've ever watched an old Western movie with those, they've got those riverboat casinos, then you'll know what I'm talking about. Blackjack, poker, those games are still around. Roulette, they still exist, and they haven't changed very much. Okay, so how is it possible for the casinos to make money in those games? It's because the predictable long-term edge goes to the house. Okay, and that's what it comes down to. So the gambling dynamics are the same as what we're looking for here. And the reality is that the universe is not structured around possibility, which is what most gamblers go for. It's about probabilities. So when we get integrity, the way that a casino has integrity. So for a casino, for example, they use the very same principles, the probability of success. Okay, and they will have people take multiple trades, multiple transactions, multiple gambles, if you will, play multiple games, so that they will get that predictable long-term profit. Okay, and that's what the casino will do. Now, will there be big winners on the other side? Yes, there will be. There will be jackpot winners. There will be people who win big prizes and that sort of thing. But the predictable long-term advantage is always going to go to the house. And so that's what a lot of traders have a very hard time at understanding. So the biggest thing that why people lose money, and I'm going to kind of digress a little bit here from what we've been talking about. One of the reasons that traders lose a lot of money is, or not all traders, but some traders lose a lot of money, is because of this dynamic, because of a low level of integrity, believe it or not. So I'm giving you a new concept here, or a new spin on an old concept. Okay, so how does this work? What am I talking about? Well, the market maker, I'll get back to the market maker here for a second. The market maker, essentially, people want to know, why do 90% of traders lose money? Which I don't think 90% of traders lose money, by the way, not anymore, right? But why do the majority of traders lose money? The majority of traders lose money because they react in the very same way to the same stimuli. So this is a rhetorical question, but has this ever happened to you, where price is moving up very, very hard in one direction? Let's say that you're in a euro dollar and the euro dollar buys, and it's buying hard, and it's buying for no reason at all. But then you look at it and you say, hey, you know what? I've got to get in on this. Either greed or fear gets you. You either get in or get out of that trade. And as soon as you get into that trade, because it looks like it's just going to continue to run up, all of a sudden the market just drops hard. Has that ever happened? It's like as if someone had a joystick and just pulled back on that joystick, right? Just waited for you to get in. They were looking at your little account. Well, clearly they're not looking at your account. It's happened to all of us. It's happened to every single one of us. But what happens is they create these stimuli which cause the majority of traders to react. And out of that reaction, it forms this crowd kind of mentality, and then they yank back on it, on that joystick, if you will. And that's pretty much how that works. And so the reality is if traders had integrity, they wouldn't be given to the reaction. And when you can get away from that reaction and you can simply trade your plan, then you will become much more profitable. Now look, every single leg here is going to be, it's absolutely, they work together. So if you don't have a good strategy, right, you've got your plan is like Swiss cheese. It's got holes in it. So you got to have a good strategy in place. You got to have execution as well. But if you have those two components and you do not have integrity, you're going to lose money. It's like this. Also, this happens all the time. People get into strategies when they see the strategy make a new high. The strategy makes a new high. Everybody wants to start trading the strategy. The strategy now has a pullback, right? It has a drawdown back to its mean. What happens? Everybody wants out of the strategy. They stop trading it. They turn off the EA. They go to a new strategy. Whatever. It's what most people do. So they get in on the highs when it's ready for a pullback, and they get in on the lows. They get out on the lows when it's ready to move forward. And so what happens is that's why people predictably lose money. So integrity is absolutely important. You could have a great automated strategy where other people are making money and you lose money because of the level of integrity. And that's happened to a lot of traders. And so that's one of the things that we deal with is trading integrity over the long haul. So having said that, our goal is to be like the house, okay? To have a high level of integrity and understand that there are going to be pullbacks, there are going to be big runs, and that we absolutely want to be married to our strategies once we know our strategies work. Now, if you can do that, what you want to look for when you can be the house, right, especially in the Forex market and especially with the strategies that I'm going to tell you about, you go from gambling to lifetime success, right? And what we're really looking for here is three components, to see three components in a strategy. And I'm going to actually make a segue into that part of the presentation. You want to see capital preservation. Guys, if you're using a strategy and it does not use stop losses, that's not a good idea. That's not going to work. And I can tell you a story about that in the beginning of my career where that happened. You always think it's going to be somebody else, but that happened, and it certainly caused me to reassess the way that I was trading. The group I was trading with, they didn't use stops. And as a result of it, we had massive winning trades, 90% winners, and then when it failed and we lost all the profits. So capital preservation is important. You got to have a stop loss. Capital appreciation is where price continues to move up. That means you have incremental gains in your capital. That's what you're looking for. And then there's capital explosion, which is what we try to take advantage of in the Forex market, which allows us to have massive increases when the market begins to run. Okay, so I'm going to actually do this, and I wasn't planning on doing this before, but I'm going to show you an example of this: capital preservation, capital appreciation, capital explosion. It's not going to be a perfect equity curve, so please excuse me. But okay, so here you have, this is actually one of our strategies. And so this is a very good example of this, and this is what people like to do. All right. We have, and these are live trades that we've taken based off of live trades that we've taken in the markets. So what you're going to notice is not a perfect equity curve. Okay? This is not a perfect equity curve. You're going to notice that there are pullbacks here, and then the market begins to move. Pull back again, the market moves again. Pull back. Even right here, if you look in this section here, from May to just the entire month of May, it was a slight gain. It wasn't a massive gain in that month. It actually went sideways. Okay? And so after that, what you see is that you see every green button, little dot that you see here is an incremental gain. Okay? This is what I'm talking about when I say capital appreciation. All right? So every little move that we have here, every time that we take a trade, we're trying to take a little bit of profit when the market does move in our direction. It's not always going to move in our direction, as clearly shown here by the pullbacks that we have, the drawdowns. Okay, so that's what you're looking for. And then, guys, what you see here is when you see a green dot, and then you see this big space and a line here. What you're noticing here, this is what we call capital explosion. So when you don't see that incremental button on top of, dot on top of dot on top of dot, what you're seeing is that price actually makes a skip. It makes a quantum leap, if you will, but a big leap, okay? And that leap there is where we have capital explosion, where the market goes off and maybe we make more than we expected to make. So instead of the 0.5%, 1%, 2%, whatever it is, then you have a 4% or a 5% gain in that one trade. It doesn't happen every day, but it happens often enough in this market, and that's why we trade the Forex, and you guys know what I'm talking about. So that's what you want. Okay, so I'm going to get into strategies here in just 1 second as I go back to my presentation. So capital preservation, capital appreciation, capital explosion. All right, great. So let's talk about strategy now. This is my segue into strategy because we're getting into that right now. So these are trading principles to consider. Listen, trading is easy. You trade effectively by clicking a buy button or a sell button at the right time. And for me personally, we like to use technical analysis primarily. And the real key to trading success is to use consolidation, to trade either consolidation, breakout, or trends. Okay, it's very, very simple, very straightforward. I like simple strategies myself. I take nothing away from anyone who likes to use more complicated strategies, but really the simplicity of understanding market movements, the market flow, that the market is in constant flux between consolidation, breakout, and trend. That's what we generally use. Okay, and so that's the market flow, and we find that that's extremely effective. Okay, so if you understand these basic principles, it doesn't take a lot. There are a lot of strategies that actually do work. Okay, there are a lot of strategies that do work that are out there. And a lot of people don't, but let's just put it this way. There are hundreds of thousands of strategies, some that work and some that don't work. The only issue is being able to distinguish one from the other. Okay, so there are a lot of losers out there, but there are a lot of strategies that do work. I know guys who trade only Fibonacci's. I don't trade Fibonacci. I mean, I trade with Fibonacci's sometimes. They're just another area of support resistance for, trend traders, right? Some use, a stochastic system if they want to, or some kind of RSI or something like that. There are systems that do work that are very, very simple and very, very straightforward, and there are plenty of systems out there. But what distinguishes them, and you've got to distinguish between the ones that work and the ones that do not work, is what I'm trying to say, inevitably. So trading is really common sense, right? And I'm actually using this example. This is from a website. This is what trading is. This is what we consider trading to be, okay? It's like price is that person. And most of the time, price is going to be just like these guys. And what are they doing? They're running into these invisible barriers, right? Right? And that's what price is for us. So 60 to 70% of the time, the market is in consolidation, as we discussed before. And we can go on with this thing the entire time. It's actually quite funny. If you want to look it up, you can online. So on YouTube. But really, it's just like that. Price is like that. It hits this barrier and it bounces off of it, and it's going to do that 60 to 70% of the time. Now, if you just traded that, you'd be just fine. But if you understand the market fluctuations, then you're going to be able to take advantage of all three of those markets. So you have consolidation, which is what we're demonstrating here, where the market continually hits this invisible barrier, right? And comes back, and that's the kind of trading we do. It's not the only kind of trading, but it's what we do. And then finally, you have this, where this guy finally breaks through this glass wall, if you will. It's a door, but he broke through it, right? And it's another barrier, and that's called a breakout. And there's a continuation of the market moving in that direction. That's called a trend, right? So we all know that. These are very simple principles. But let me tell you what's not simple for some people and why they get caught up by this. They get caught up by this because of putting it all together. You've got to have that triangle. The trading performance triangle is where it comes in. These are simple principles. What I'm talking about is a very simple principle that works. Okay, it's a strategy that can be developed around this very simple concept. Okay? So there are zones in the market where the market is most likely going to do something. Okay? And we call them pods. So most people spend long hours taking trades in front of a computer. They're looking for these opportunities at random price points. Well, I'm here to tell you that you don't have to do that, that there are zones, and we call them pods, okay? Points of decision. There are places where the market has to make a decision about where it's going, one way or the other, okay? It's going to either break through or it's going to retrace, okay? So it's either going to be a bounce or a breakthrough. And in most situations, the market will, in 60 to 70% of the time, 65 to 70% of the time, will simply bounce off of that area of support and resistance, those invisible barriers that I talked about and that I showed you. Okay? So that's what we do. We call them pods. Okay? And they signify for us that something big is going to happen, points of decision. Okay? So this is something you can understand. Many of you are veteran traders, right? But if you focus your time and your energy and your trading capital on pods, you will most likely be able to reduce stress and dramatically increase your chances of success and your performance. Okay? So for us, those are trend lines. I'm going to give that to you. Double zeros are important. The 80-period Bollinger Bands, if you put that on a higher time frame, those are good. 50, 200, and 800 exponential moving averages. And so these are pods, and you can, my slide's moving a little bit too fast for me. These are pods, and you can see where price turns generally in the market at those pods. And I could be looking at a daily chart, and I could be looking at a 15-minute chart, and it's going to be more or less very similar movement as this. But certainly looking at a higher time frame is where you have a tremendous amount of power. Okay, so that's what our system really looks for. All right, so let me show you how that works and what's important in looking at a system, because that's what you're about. Maybe you'll never trade a system like this, looking for reversals and consolidations, and also looking for bounce points and trends. Maybe you will never use this kind of system. That's not your style. Okay. So what is important, though, guys, is that you back test whatever strategy you do have. I'm going to talk to you about how our strategy works and what we use to make sure that we do have a solid strategy with solid performance. Okay. Now, back testing. Let me just say this: past performance is not necessarily indicative of future returns. Okay. It does not guarantee future results, right? But it does give us a probability of success, and you want to be trading something that has a higher probability of success than a lower probability. Okay? So in anything that you do, I highly recommend, as a strategy developer and a clearly a long-time Forex trader, you're going to want to back and forward test strategies. So you want verifiable, strong, back-tested results. And then, of course, forward-tested results, which are battle-tested out there in the real world. The reality is that backtesting is the bedrock of all strategy development. Okay? And this is what we found to be true. Now, this is that strategy that you looked at just a bit ago, and it's from March of this year until August. And now I've actually just shown you the full run. You can see that it went up quite a bit more, and then it went sideways. And so we're currently in one of those sideways movements. Okay, where it's going sideways, where it's vacillating between 2 points as far as equity is concerned. Okay, and so what you want to do is you want to make sure it has that performance. So let me talk to you about what is important and what you have to look for here. So first of all, the most important thing is profit factor. For us, profit factor is important. That's how you're going to determine if that strategy leg of the triangle is in is if it's strong, if it's solid. Okay, so profit factor. So here it's 3.16. What does that mean? For every dollar risk, there's a 3.16. There's $3.16 that you've made. So for every dollar risk, $3.16. For me personally, I like when the average is more or less to be anything over 2. So if it's anything over 2.0, I'm happy with that profit factor. Okay? And you guys, you can do this on your own. You don't need TradeStation or anything like that to be able to do that. The other thing I look to is I look for percent profitable. So my percent profitable, I want it to be above 75%. That's just where I feel comfortable. So if it's anywhere above 75%, that's where I want. That means for for any group of trades, I want to be winning 3 out of 4 trades, or have done that in the past. Although past performance is not necessarily indicative of future returns, I want to see that that strategy has produced that in the past. Okay? So that's 82.57%. Okay. And so those are two of the things that you want to look for there. And you also want to, you obviously want to look for the equity curve. You want it to be moving up steadily, and that those two things put together. Usually, if you have a good profit factor, you're going to have a pretty good, and a good percent profitable. You're going to have a good equity curve, and you're going to want to make sure that there are over 100 trades in that set. All right. So having said that, I'd like to go on to execution, because if you have a 1,000 horsepower car and only 200 horses are going to, or 1,000 horsepower engine and only 200 horses are going to the wheels, then what do you have? You actually have a 200 horsepower car, right? And so that's what happens to a lot of traders, is that they don't execute properly, and as a result, what we see is that they're not getting the full benefit of their strategies. Okay, so execution is supremely important. Now, how is it possible for me to take advantage, the full advantage of that strategy and of that 82.5% and of that 3.16 profit factor if I don't take every trade? So the only way to really effectuate those kinds of results is if you take every trade. If you don't take every trade, then it's not going to work for you. So that's one of the biggest things about execution. Now, there's a problem with execution in the Forex market, in the foreign exchange market. The problem is that we're human beings and we have to sleep at some point. That's number one. Number two, we're fallible. Number three, sometimes the trades come so quickly we're not able to get into them, do the math on our contract size, if you use contracts, position sizing, and that sort of thing, right? So what we tend to do is to eliminate that issue, is that people usually have this thing between discretionary and automated trading. Well, we kind of like to marry the two and have a hybrid methodology. Why? Because automation is important. It's going to allow us to do tasks that were generally held for human beings to do, right? And the benefits obviously are that we're going to have consistent trades, consistent execution of our trades. We're removing all of the emotion that we would have as traders. We can back test our results, but really it's a flawless execution and the consistent execution, right? And that's why I initially became an automated trader. Okay, so I'm a discretionary automated trader. It is not an oxymoron, a moronic statement. Okay, the reality is that if I can use discretion, which makes my systems easily adaptable to new market conditions, that gray matter between our ears has a tremendous ability to process information and to analyze better than an automated strategy. And I've done them both, and I do it both, right? We still use the automation to do some analysis. But if I can determine the market direction and then say, hey, automation, what I want you to do is I want you to analyze and find the optimal level to get into that trade, then that's what we'll do. That's basically what we do. So when you marry the two together, you get a hybrid methodology. And that hybrid methodology allows you to, number one, spend 5 to 10 minutes a day actually trading. And number two, it allows you to take every single trade, okay? Because you can just set up your charts, walk away from it, come back the next day, and do it again. So that is basically what we do. We use a battle-tested, back-tested strategy. And we use automation to execute it. And above all, guys, even if you have a battle-tested back tested and battle tested strategy, you will have, if you don't, and you have execution, you have automation in place, you can still mess it up with integrity. Now, integrity is not something that we can give you. It's something that that you have to gain for yourself. Now, what helps with your integrity? Obviously, automation helps, because if you don't have to sit in front of the screen all day, taking those trades yourself, you're less likely to be reactionary by what's happening in the market, reacting to the stimuli of the market maker, or just general market conditions, or a drawdown, right? But you still can do that. And if you have a strong strategy that you have a high profit factor with and a high win ratio with, and has proven itself over time, it's been battle tested and back tested, and it works, then you're more likely to trade your plan. But even with those two things, it really takes the determining factor between the winning and the losing trader, inevitably, is how that trader is going to react to market conditions. So that's something that cannot be taught. There are courses out there that teach you how to do that. I endorse one of those courses. If you have any questions about that, I would absolutely endorse one course specifically that has made a big difference. I make all of my in-house traders take this course. I don't make them do anything, but I strongly encourage them, I will say, to take this particular course, and it's a course on high performance in life, and it deals with being reactionary and being able to have integrity as far as doing exactly what you say, right? And that's what you need. So if you have integrity, you have a strategy in place, you have execution, then you have the three core concepts. And those three core concepts, as simple as they may be in their actual execution, they are there's something that's required. You need resources to do that. You need to have a strong system already that's already been back tested. If you have a system that you like, back test it. Begin to back test it back the entire year to see how it's performed. Make sure that you have exact rules, okay? And then, of course, if you can, automate any portion of it. Automate as much of it as you can so that you'll have solid execution. And integrity-wise, it's just something that people have to work on for themselves. All right, so let me just say this last thing. And what I want to say is that performance is not personal. Okay, so if you think that, you know, some people are just born successful and other people are just fail at certain things, yeah, that's true. That does happen, that some people just fail at certain things. But people aren't born successful. It's the actions that they take that make them successful. Performance is purely based on action. Those who take right action have right results over the long term. Okay? So that's what I really want to leave you with. And I want you to leave you also with a question. What prevents us from taking right action in our lives and in our trading? How many of you have had a New Year's resolution, really quickly, and this is a tangential question. How many of you have had a New Year's resolution and just never fulfilled on it? You're smart people. You've accomplished a lot in your lives. You're more than capable of doing what you want to do. But yet you still haven't been able to fulfill on that New Year's resolution. So as much as we say, hey, integrity is not an issue for me, sometimes integrity can be the very thing that's holding you back from being a successful trader. So I want you to consider that, because there are things that hold us back in life from accomplishing the things that we want for our lives, right? So let me say this. If you go to Try Forex, there's a link I'm going to give you, because we have considered all of these three things. Integrity, we've considered strategy, we've considered execution, and we've been able to put all that together at tryforex.com. Okay, so Try Forex, we have a community of traders. We have Try Forex strategies, which are battle tested, which have back testing and obviously forward testing, and where you have the actual numbers for the profit factors and for the money earned going forward. There are actual trades that are taken by our community. okay? The expert advisors for execution, for automated trading, okay, alongside with the discretionary trading. So it's a hybrid methodology. A trading course, so you learn the methodology behind what's being traded and how the expert advisors works, and of course work and the Tribe Forex indicators themselves. So that's something for those of you who are in here who are interested in this methodology. And when I say this methodology, I mean the trading performance triangle. Try it on for yourself. If there's ever a loss of power in your trading, it's going to come from one of those three legs. It's going to come from integrity in your trading. It's going to come from the strategy itself, whether the strategy is broken or not, or if it ever worked at all, or execution. And you may be just in execution, you may have executed all the trades you've taken properly. The problem is that you're not able to take all of them because you're sleeping at night, because you've got other things to do. You want to spend time with your family. Let me say this as well, that you didn't come into this market so you can sit in front of a computer all day inside of your house. You came to this market so you can get freedom. I don't know about you, but that's what I came for. I came for freedom. So I don't want to sit in front of my computer all day either. Between the pods that I discussed, the points of decision, and the automation, you can be free from your monitor and from your computer, and you can actually get a tremendous amount of freedom and power through the trading performance triangle. So if you're interested in what we're doing here and in having a full system that really covers all of the bases, then we're at tribeforex.com/profit formula. And guys, last thing is that if you have any questions about the course I talked about performance, you can go to info@tribeforex.com.